GTR spoke to Shivkumar Seerapu, Deutsche Bank's regional head of trade finance in Asia, at its Asia Trade Finance Week 2014 conference in Singapore, to find out more about the internationalisation of the renminbi.
Internationalization of RMB is picking up. The trend we are seeing at Deutsche Bank is a lot of interest not only from corporate clients but surprisingly from a lot of our bank customers as well. We have seen almost a 75 to 80% increase in the volumes that we are handling in terms of trade settlements. That is in the first 7 months of this year. Almost 20% of all of China's trade is now denominated in RMB. And so it is just a matter of time that this is going to keep going up. While there is a lot of excitement about RMB, I think you're right in saying that corporates are still somewhat hesitant in taking this up, and the adoption has not been, while it is still increasing significantly in percentage and absolute terms, there are some specific reasons why the adoption is a little slower. Clients are still getting to understand what this all means, the operational and the technological complexities that they need to adopt in their back offices to have this. And I think also at some stage, other than the large multinational corporates and the banks, some of the mid-tier corporates are still hesitant about the implications of the FX risk. Purely from an exporter's perspective, one single biggest benefit of moving into RMB, it helps them to penetrate the Chinese market better and faster, bond with their Chinese customers. Today, when our corporate customers buy from China and they want to pay for it in US dollars, their Chinese suppliers build in the cost of the FX risk into the pricing, right? And that can be sometimes very fuzzy, very intransparent, and all our surveys and estimates and analysis show that that could vary from 2% to 5%, right? So the moment a corporate is willing to buy from China or import from China and pay for it in RMB, there is a potential that it eliminates FX risk for their supplier, and therefore they can negotiate lower pricing. In terms of the likelihood of the use of RMB going beyond just LCs to non-LC trade, I see that likelihood as very high. We're already seeing corporates and banks use RMB not just to settle LC trade but also open account trade. So that is picking up, obviously not as much as the LC trade. The trade settlement part is still largely denominated by LC trade, but open account trade is surely but slowly picking up. It's surprising that we now see European countries like Germany, UK specifically, and also France, who have hit the high teens, in between 15 to 20% of their trade with China is now denominated in RMB. A few years back, only maybe 2 to 3% of Germany's trade with China was in RMB. Today it is almost 15 to 17%. So the speed of conversion is very, very encouraging, and that shows the global appeal and the global adoption of RMB taking place. If you look at the LATAM countries, whether it is Mexico, Chile, Argentina, Peru, they've all reached a stage where almost half of their entire trade with China is now in RMB. So the percentages vary from 50 to 60%. At last count, I think there were almost 20 countries or more where China had swap agreements in place. In some countries it is in the form of non-deliverables, in some countries it's in the form of deliverables, but the speed of evolution in this space means that for all practical purposes, notwithstanding the regulations and the documentary requirements, etc., most corporates who deal with China in RMB are able to hedge. But one of the things that will have to happen first, before it gets to a stage where it is a true reserve currency, is to get to a stage of free convertibility. For all practical purposes, most corporates and individuals can freely convert. So it will get to a stage where it is convertible enough for people to start using it as a reserve currency.